Third question for the paper, May-June 2021, paper 21. TC Limited is a manufacturing company. I mean, this question should be related to the manufacturing account. So this is a manufacturing account pattern, the format. Okay, let's see what are the additional information. Then we do the adjustment accordingly. Inventory at 31st January 2021. Raw material, work in progress, finished good. So take notes that for number one, the closing inventory. Closing inventory. So for raw material and also the work in progress. So these two will be under the manufacturing. WIP, also the same thing, work in progress under the manufacturing. Whereas finished good, the raw material for the finished good, this one will be under the income statement, under the cost of sales. And also this these three go to individual manufacturing, and cost of sales. And then another part is that for three of the account, for these three items will appear in the statement of financial position under the current asset. So take note that we must show the three items in the current asset individually. Okay, number two, the factory equipment to be depreciated at 20% per annum using reducing balance. So reducing balance method, the formula is taking the cost minus the provision for depreciation and times the percentage. So let's see what are the information. Okay, the cost is factory equipment. Here, this is a factory equipment. The cost is 90,000. And then the provision is 30,960 times the 20%. So this is the amount that we get. Let's calculate 90,000 minus 3 times 20%. So this is the amount for the depreciation. And this one is related to the factory. So this is under this amount will be sitting under the manufacturing account under the overhead factory overhead section. So take note for it. Next is number 3. In December 2020, 3,600 was paid for the rent for the period 1st December 2020 to the 28 February 2021. First of all, what is your financial year? Financial year ended. Okay, financial year ended on 31st January 2021. So this financial year ended. So they pay up to the from the 1st December 20 to the 28 February 21. So this one is how many months? December, January, February. Total is 3 months. How many months consider prepaid? So the prepaid equal to from the 1st February 21 to 28 February 21. So that means basically only 1 month prepaid. So we need to calculate, take the prepaid amount, which is 3,006 divide 3 times 1. So we get the answer 3,006 divided by 3. So this is a prepaid amount. Prepaid amount, prepaid expenses. Okay, so this one is a prepaid expenses. Prepaid expenses end of the year will be sitting under the statement of financial position under the current asset. And to calculate the rent, okay, our rent amount, rent and rate. So rent and rate. In the trial balance is 19,620 minus the prepaid amount 1,002. So we get is, let's calculate, 19,620 minus 1,200. So this is the amount for the expenses incurred for the year. So 420. Okay, now next is that, okay, they say that here got the rate again. So we do the number 4 first. Okay, because got the some more adjustment. The rate, okay, rate unpaid is the liability. So the amount is 550. So this is the unpaid. End of the year, unpaid is a liability. So current liability. So this is the amount for the current liability. And we have to minus from the rent and rate because this rent and rate are combined. So we take this amount. So since I need to, this one, current liability, end of the year we have to plus. Prepaid expenses have to minus, accrued expenses have to plus for the year end. So we calculate again, 18,420 plus 550. So we get this amount. Okay, so 18,970. So this is the amount for the rent and rate for the year. But number 5, they say that rent and rate are to be apportioned equally. So factory and the office. So means that the manufacturing account will take half. So 18,970 divided by 2. So we get 18,970 divided by 2. So we get 9,485. So this one is 9,485. Okay, where else? Income statement. Okay. Income statement. Under the expenses, so we also will get another 9,485. So this one, income statement, will be under the factory overhead section. So take notes. Okay, now next is that, okay, they asked to prepare rent and rate. So in this case, we see what is the opening first. So here they don't have the opening, they straight given us the total amount paid, which is 19,620. So 19,620. Okay, what is the financial year? Okay, let's move down a bit. Okay, the financial year end is 2021, January 31st. So this is the balance breakdown, which is the total amount paid. So this is a balance. Okay, balance breakdown. The total for the year paid. Okay, you can put bank as well. Okay, and then here we have the adjustment made just now. Number 3, this one, which is that we calculated, this is the prepaid expenses. So prepaid expenses end of the year will be in the credit side. So here we put balance carried out. So this is for the what's number 3 for the rent. Okay, this is for the rent. So the rent amount prepaid, which is 1,002. So this is the amount that we get. And next is that number 4, this is accrued. Number 4, this is accrued. So we put balance carried out, which is 550. 550. Okay, the next one. Okay, now the whole year, based on the calculation, this is the calculation we get. Okay, so now because they want to split into two, this total amount we have to split into two. So this one I need to create two lines. Okay, so one go to manufacturing account. Another one go to the income statement. So we have to split it up and go to different section. Okay, here 9485 and also 9485. So this is the amount that we calculated. So we subtotal, it will get back the same amount. Okay, so this one subtotal. So both same. Don't forget in here 2021 February 1st balance work down. Okay, so both sides also have balance work down. Okay. In the exam, remember do all the date, all the detail properly. Okay, so debit credit must be complete one set. So this is the answer for the rent and rate. Now next, manufacturing account. So manufacturing account, what we have, let's move up to on top first. Oh, cannot. Give me a minute. Okay, I cannot move up. So I just do it here. Okay, the first section will be the cost of raw material consumed. So what is our raw material consumed? Opening inventory here. Inventory at first February 020. Okay, this is the first item that we have. The amount is 75. Okay, and then purchase of the raw material, purchase of raw material, So this one is 91400. Okay, see any got additional information? Okay, they have the carriage inward on the raw material. So we have to plus carriage inward for the raw material, which is, okay, let me put into the first row. Okay, the carriage inward is 6280. Okay, at the top total. There's no return. Okay, then after that, we less inventory at 31st January 2021, which is in the additional information. Here 8,000. Okay, 8,000. So take the opening plus purchases minus closing. So this is the amount that we get for the cost of material consumed. So this is the amount. So this one we can ignore it. Okay. Now next is that we have direct wages. Let's see where is the direct wages. Okay, this one factory operative. This is a direct wages. Okay. So we follow what they put there for factory operative wages. So follow back, but because no adjustment, we just take the 52,000. There's no adjustment given. So any other direct costs, let's see. Okay, don't have the direct cost. So we just take these two. And remember, the prime cost must write the word prime cost. Take notes for it. Now the next one, factory overhead. So what is the factory overhead that we have in this question? This is a header. Let's see one by one. Okay, factory supervisor wages. This is one of it. And then rent and rate, we have calculated. Rent and rate that we have calculated. And then insurance. Okay, insurance to be proportion. So insurance also have to calculate. And then after that, general factory expenses. General factory expenses. Let's see what else that we have. Okay, factory depreciation, which is that depreciation for factory equipment. Okay, so now let's put in the amount. Factory supervisor 23100, no adjustment. And rent and rate, there is adjustment, which is we have calculated in here. So we don't need to show the working, that is fine, because this is our answer already. Next is that insurance. Okay, insurance better show the working because this one, there is adjustment for it. Okay, let's see. Insurance is 4,006. And they say that insurance 75%, 75% for factory. So this amount we calculate 4600 times 75%. General expenses, no adjustment. So general expenses 4,002. And then depreciation. So just now we depreciation calculated. That's the depreciation. Okay, this is the working. So copy the working. Okay, put at the back. Then this amount is what we have calculated. Depreciation is 1180. Okay, so we add all the items. We get 52,000. Cost must plus together. This is have to plus, not minus. And then work in progress. So work in progress, we have opening inventory and the closing inventory as well. So 1 plus 1 minus. So opening is a plus. Opening inventory 11220. This is a 2 plus. And closing inventory have to minus. This is a work in progress. Okay, we take the differences. Take this minus this. So we get the negative. So this negative we have to minus. So minus, okay. So you get this amount. Then 200,000. If you don't want, then you can put like this. Okay. 680. So just in case that you scared you forget, just put the bracket. So this is the answer we get. Okay. Now, next is that. Okay, let's see what are the items they asked for. Okay, here we put cost of production. Okay, now next move on. Okay, now the question C. They say that the director of TC Limited are considering the purchase of various lower value item of office equipment Advise the director whether or not they should charge depreciation on this item. Justify your answer by giving the two advantage and two disadvantage. Okay. In terms of the accounting principle that we have learned, okay, the principle accounting principle. Okay, we have learned the prudence. Number 2, matching. Number 3, consistency in this chapter. So what is the item that we can use? Since that this one talk about the advantage, then we try to use the accounting principle to apply on our advantages. So number 1, okay, advantages. So this one based on prudence principle that non-current asset should charge depreciation based on usage of the asset. So therefore, profit and asset will not overstated. Okay, this is one of the item that we can see. Okay, we add one more. Okay. Other than that, number 2, okay, applying matching principle, the company should practice charging depreciation to match the cost used to generate the income earned for the same period. Okay, so this is the reason or the advantage, so we will not overstate our profit. Other than that, you can talk about the consistency. Consistency means that we should apply throughout the useful life. So we should follow. So in terms of the consistency, okay, applying consistency principle, the low value item of office equipment should prepare depreciation as other non-current asset. Okay, so this is the answer that we can put for the advantage. So that this all means that fulfill the IAS standard. Okay. So next is that disadvantages. So number one is the cost of low value item of office equipment may not be significant material compared to overall of capital invested. Therefore, it would it will it would wait, let me adjust it. Okay. Therefore, it would not give significant impact to the financial result if the company choose not depreciate low value item. So this is the explanation. It's not significant to the overall of the result. Second is that it will waste the time spent on monitor the low value asset it will waste the time spent on monitor the low value asset and it is not effective cost saving to the company. So there is one of the disadvantage. You're wasting the time, wasting the resources to prepare, to monitor. It will waste the time spent on and resources on monitoring the non-current asset. So now, next is that always remember, nowadays the question always asks you to do the advice. Advice means that you need to make a conclusion. So what is your conclusion that you can make? Conclusion or suggestion that you can make. So personally, we should monitor it. Okay, if we think we want to support the advantages. If the value is insignificant, total to the, I would suggest not to monitor it because it's a wasting time. Because in the company, in the accounting, in the business, actually we can fully expand off low value item for the non-current asset because the value is insignificant from the tax point of view, it's allowed us to do that. So that's why here we should, if the value is insignificant, we should, because it will waste time to monitor insignificant amount. So my conclusion and your conclusion may be different. So for my conclusion, I would suggest the company know to maintain not to charge the depreciation of low value item if the overall total value compared to capital invested are not significant to the company, so that the resources can be used for other purpose. So that is my reason. This is what most of the company doing for the bid organization. What we do is we normally will charge it up as a expenses rather than we monitor under the non-current asset. So this is a common practice in the big organization. So now let's move on.